There are literally thousands of indicators you can use as a short-term trader. Our guest today is Marcus Heitkotter. He's here to talk about the ones that are his favorites. So Marcus, I know Macd is one of your most important indicators. First of all, talk about what it is and then how do you use it.
Yeah, Macd is the moving average, convergence, divergence, and basically it is a study. So we're having one indicator there that is measuring the difference between two exponential moving averages, a slow moving average and a fast moving average. Then we have another line on there, the so-called signal line, which is a moving average of the Macd, and the third component is usually the histogram.
What does that look like on a chart? Is it actually on the bars themselves, or is it one of those ones that's below?
It's one of the studies that is below. And the way how most traders use the Macd is that they are looking for a simple crossover of the Macd and the signal line. So when the Macd is crossing the signal line from below, they want to go long, and when it crosses it from above, they want to go short. But there are significant disadvantages when you're using it this way.
We'll talk about those.
Well, especially in a sideways market, you get often whipsawed and you're getting a lot of false signals. So the way how I like to use the Macd is that I'm not looking for a simple crossover. In addition, I want to see that the Macd is above the zero line before I consider going long, and that it is below the zero line and its signal line before I consider going short.
Are there specific markets that Macd works best on?
No, I mean, I'm a day trader. I trade mainly the futures markets. I trade crude oil. I trade gold. I trade the interest rates. I trade the stock indices like the E-mini S&P, the E-mini Dow. I trade the currencies, and I mean, Macd just works in all of these markets.
So how many signals can I expect to get on any given day with the settings that you use for it?
Well, usually per market, yeah, there might be one or two settings, because I only like to trade the active trading session from 9:30 to 11:30 Eastern time, because that's when the markets are really moving. After this, we're going into the lunch break. The markets are rather flat, and especially if you're trading commodities, there is no afternoon session. So I limit my trading opportunities to the first 2 hours, and you might get one or two opportunities per market.
So Marcus, you probably hear from traders who have these thousands of indicators they're looking at. How did you settle on Macd as one of your favorites?
Well, I've been trading now for 22 years, and I've used so many indicators. You have to find a setting where you have several confirming indicators. So I like to use Bollinger Bands. Macd is another indicator, and the third is the RSI. And I found that these three indicators are nicely confirming each other. Because one thing you want to avoid, that you have conflicting indicators, because then you suffer from what I call analysis paralysis. Half of the indicators are screaming buy, the other half is screaming sell, and you don't know what to do.
Marcus, thanks for your time.
Thanks for having me today.
You're watching the MoneyShow.com video network.